What's up everyone, it's Caddy with MoneyVest. So in today's video, we are going to be talking about Mastercard. Mastercard is the second largest payment network processor in the world, offering both debit cards and credit cards, partner with a lot of global banks around the world. And in this video, my goal is to break down and do a complete comprehensive fundamental analysis on this company to better understand whether Mastercard is a buying whether it's a stock that's worth buying or not. We've done a video on Visa in the past, so make sure that you do check that out. And as always, make sure that you drop a like and subscribe to the channel as well if you're just joining us for the first time. And again, links to our Discord and Patreon is going to be down below if you're interested in joining us. And of course, getting access to the entire MoneyVest platform at a huge 51% discount at the moment. And we launched our website yesterday, and now it's accessible to everyone with limited spots left. Over 20 plus years of financial data, historical data, plus over 17,000 stocks available with over 100 financial metrics and MoneyVest metrics, including for fundamental charting and visualization as well. So links can be down below. We'd love to have you on board for a limited time. This offer is available. So first things first, let's talk a little bit about some of the differences between Visa and Mastercard. As we know that Visa is the largest credit card network in the world, Mastercard being the second largest in the world and accepted in over 200 to 210 countries respectively, offering a lot of rewards programs and different range of benefits, including different tiered cards available, including for travel and purchase protection. Fees vary depending on the issuer, and competitive exchange rates for international transactions as well, contactless payments and technology, and of course 24/7 customer support. So there's really little to no sort of distinguishing factor between these two companies. Of course, operating in the same sector or also competing for the same market. Visa is, of course, a much bigger company altogether because of the global volume that it does, and of course the number of cards that are issued out in the open market for Visa. Now, Visa is essentially going to be an M score of about, I think a little bit over 3.7. It's 3.7 out of 5, which again is very, very strong. And MasterCard, on the other hand, is a 3.5 out of 5. So market cap sitting just over $420 billion versus Visa, which I believe is a much bigger company at $551 billion. So combined, they are almost at $1 trillion in market value between these two companies. By the way, this is again the entire platform that you can access, and it's going to be available. We're just started with the beta launch, and we're onboarding a very specific number of people, limited number of people. So obviously you can join and of course take advantage of the entire platform and its functionality as well. So if you come over to the balance sheet, so let's just come over here. And if you come over to the balance sheet over on annual data, so last 10 years worth of analysis, you'll take a look at the nice consistent growth in revenue. And if you scroll down a little bit, operating income and net income, if you try to plot that as well, you can see a very nice consistent growth in operating income and bottom line net income of just over 11.1 billion, which is of course increased from just over $3.6 billion for the company as well. If you come down all the way, if you include for EBITDA, this right here, again, also very nice consistent growth. So if I remove for revenue, you can see a very nice uptrend for, again, profitability, operating income, net income, and EBITDA of well over $15 billion compared to where they were back in 2014, $5.4 billion for the business as well. If you plot for the last few quarters, so if you come over to quarterly data, if you look at revenue, and again, if you plot for, let's say, last 16 quarters for the company, and we come down operating income, net income, and EBITDA as well. And again, you can see a very nice consistent trend of everything kind of moving in the right direction, growing for across the board for revenue, operating income, net income, and EBITDA as well. Now let's go over to the balance sheet. As of the most recent quarter, if you come down to the balance sheet, total cash for the company is sitting at well over $7.6 billion. And long-term investments are 1.7 billion. So we got 1.7 billion worth of long-term investments, 7.6 billion worth of cash, and we're talking almost $9 billion worth of cash and cash equivalents. And then if you come all the way at the bottom, and if you look for, let's just do total liabilities, we're looking at around $35 billion as of the most recent quarter, and long-term debt is going to be sitting at 13.5. So we do have a little bit more debt than cash and long-term investments on the balance sheet. So the company unfortunately has a little bit more debt than cash and long-term investments here. So we have a positive net debt for the business at the moment. And if you come over to cash flows, all the way at the bottom, this right here has been the free cash flows for the company. Every single quarter, they're generating well over $1 billion in free cash flows. If you go over to the annual data for the last, let's say, 20 years, this right here is very, very consistent free cash flows for the business. If you come over to the MoneyVest metrics, and if you go to the last 10 years, you can pretty much see that the company's been on a very nice consistent growth. Shares outstanding have in fact gone down. So you can see that it's gone from 1.1 billion down to under a billion, so 950 million roughly. So that's a very nice share buyback of about 2.47% over a 10-year period. And free cash flows have increased by 11% in that same period for Mastercard. So this right here is the consistent increase in free cash flows at well over 11% for the business. If you scroll down a little bit, operating margins, everything has been expanding very, very well. This right here is the efficiency table, scores a really nice 4.1 out of 5. And financial table wise, again, up until last year, they had actually a little bit further back. So we have to go further back to really see the net debt being somewhat negative here. So prior to 2020, the net debt was negative, meaning the company had more cash than debt on the balance sheet. And the last 3 years, of course, it's turned into a more positive number of well over 4 billion. So the company's got more debt than cash on the balance sheet now, which of course is something to keep in mind. This right here is going to be the valuation. So you can plot a lot of these things and try to better understand how the valuation has progressed for the company over the last 10 years. You can see the price to earnings has come down from a high of 55 down to a more stable level of 35, and price to sales also trading at just under 16, which has also gone up significantly from 50% increase since 2014, but of course significantly lower, down from 23 back in 2020. You can also come over to fundamental analysis and go over to ratios to better understand the overall valuation for the business. Scroll down a little bit and you'll notice the price to earnings on a forward basis at just over 30. Price to sales on a forward basis, trading at just over 14.67. So again, these are some of the forward multiples for Mastercard versus its 5-year average of 22 and a price to sales forward average of about 13. So again, definitely trading at a bit of a premium valuation, which is exactly what our MoneyVest metrics also has for us on that page. It's still recommended as a strong buy with 31 buy ratings, 4 hold and 0 sells, high price target of $645. A low price target of $428 and an average target of $521 with an EPS expectations to grow at 17.5% for the business and revenue CAGR of just over 13% over a 3-year period for Mastercard. So that right there is going to be the expectations from Mastercard. Okay, so when we look at the historical numbers, we already looked at 10-year growth for free cash flow of just a little bit over 11%. If you come down to the last, let's say, let's just go to 5 years. 5 years worth of analysis, we're looking at free cash flow growth of 13.75, net income growth of just over 13.8, so just under 14%. If you come over to fundamental analysis and then analyst estimates, all the way down, we've got a 17.5% growth rate for Mastercard's growth in earnings per share, all the way to $26.54, from $11.83 all the way to $26.50. So if you come over to the Analyzer tab, we're going to do both discounted cash flow and discounted earnings. If you do an autofill here, we're looking at just over $10.8 billion in cash flows, free cash flows. If you forecast for 5 years, again, last 5 years was 13.75%. Let's say that we go a little bit higher number at 14%, 2% share buyback, 3% terminal growth rate, 10% margin of safety, 12% discount rate. If you hit calculate on a DCF, we've got Mastercard being overvalued significantly by over 53%. Again, discounted cash flows tend to be a lot more aggressive because they're somewhat deep value models, because you're really discounting for cash flows, right? Free cash flows, which are not very easily accessible because the companies do have a pretty significant amount of CapEx. And for those reasons, again, it's a more sort of deep value model for a lot of companies. Discounted earnings can be a little bit more aggressive, but this right here is a more deep value model. It's going to give you a significantly discounted value compared to the discounted earnings multiple model. So for 7 years, 14% growth rate, 3% terminal, 2% share buyback every year. And even then, we are overvalued for Mastercard by 43%. Fair value ending up at around $256. And if you take a look at where it's trading at the moment at $450, if you try to plot the $450 level, let's just go to $442. That means that markets are pricing in for a 22% growth rate over the next 7 years for free cash flows, and also expecting a 4.5% terminal growth rate beyond that 7-year period. So that's what Mastercard needs to hit in order to justify today's valuation is a 22% growth over a 7-year period on their free cash flows. Now, if you come to discounted earnings and if you try to plot for, let's say, the next 7 years, and we go with a, again, 14% growth rate, P multiple again has been much higher. Last 7-year average of 38. Right now, trading at over 30. I believe it's going to more stabilize around 25. Same share buyback, same discount rate, same margin of safety. If you hit calculate, and now we're looking at a 20% overvaluation with a fair value at $357 per share, with a future price target of $877 over a 7-year period. And this right here is going to be the entire breakdown for the sensitivity grid and the matrix for Mastercard's intrinsic value. And again, coming over to where the price is today at 450, 449, we're going to be somewhere around here. And that again is representing for an 18% growth rate the markets are expecting. And that's kind of in line with what the analysts are also expecting, but on a 5-year basis. So if you come over, do this for 5 years, and if you go over to, let's say, 14 again, come over down to 25 times P multiple and hit enter. Now we've got a fair value of about 327. It's going to be a 27% overvaluation for the company. Future target price of $641 over a 5-year period. So it's overvalued by 27%. And this again is going to be the sensitivity grid and the matrix. And so the beautiful thing is that again, you can use this model, plug in values however you want. You can visualize a lot of the data, quarterly data, annual data, whatever you want on the platform and see those things for yourself. And that's exactly why we've built this, so that you can do full, comprehensive, in-depth fundamental analysis on a lot of individual stocks that are available to analyze and make more confident, more informed investment decisions. So when it comes to the technical analysis, we got a very strong support for Mastercard around 437. So that right there is going to be the first level to keep in mind. Of course, if we do get a breakdown below this level, the next supports are going to be all the way down at the 380s, 390s. And that, in my opinion, is going to be a much better, much stronger support level to watch, and an area where I could see myself finally getting some Mastercard. But at the same time, I am concerned with a little bit of the balance sheet. I've always personally preferred Visa over Mastercard. So that is something that I've always mentioned. I think Visa is a much higher, much more quality company compared to Mastercard. But 389, 390s is going to be a reasonable level to watch for Mastercard as well. Visa also breaking down a little bit from its symmetrical triangle. So maybe we can do a video on Visa as well. Support level at 266, that's going to stay put. And if we do see a breakdown further, next level is going to be down as low as $249 to $250 per share. So hope you all enjoy this video and a complete update on Mastercard. Link's going to be down below if you want to join, of course, be a part of our community and access the entire platform and the website and analyze all the stocks yourself. All right, now we're offering a 51% discount, so you can lock this pricing in, of course, for life until, of course, you cancel. So link's going to be down below as always. Happy investing. I'll see you all in the next video.